All right. Hello, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a great trading session. It's actually a pretty choppy trading session. I haven't found a whole lot to do today, but I'm gonna cover some of the majors and just talk about kind of what I'm seeing here. So first and foremost, the euro dollar is finding support. Before we get to that key, what I think 111.50 level is, which if you guys don't remember, it's the big 38% retracement. You see this move here. It's the big 38% retracement. Comes in, right around 111.50. We came within striking distance. I had an order sitting down. Actually, I still have an order sitting down there. Let me rephrase that. I might actually remove it and move it a little lower, because here's the thing. It looks like we're trying to form a higher low, but that doesn't mean that that's gonna hold going into Friday and an Asian trade. So what could happen here realistically is we drop back down towards what I think is the 127% extension of this move. You can see this move right here, right? 127% extension of this move gets us to 111. Hold on, what just came out? Houston area intensive care units reach maximum capacity. Let me put this in our chat for those people that aren't listening in live right now. It's not good. It's not good. Problem with Texas and Arizona, where I live, is just that we really need to go into like a lockdown state, or only essential businesses again. But I don't know if the respective governors are going to want to do that. So the thing is, I don't know if these numbers are going to improve at all. But anyway, what I wanted to say is that the euro dollar, I think, might be a better long down here at the 111, let's call it 20 level, which is the 127% extension or close to it. But it would be channel support or flag support, and then I'd rather be long down here. So if we break 111.50, I think that's a straight shot to this 111.15, and I think that is where the market is going to be looking to go if we break this 111.50. Are we going to break it? I don't know. Right now it doesn't seem like it, but that's right now I think traders are probably covering up shorts that they had from up here, and they got their stops below here. But I do think that this is possible. Okay, let's talk a little bit about the cable. Cable isn't doing much, but it like the euro. Let me go ahead and draw something here. From this low to this high. Okay, there's the 618 retracement, and the thing is, if the euro breaks down, it's going to take the cable with it. I mean, that I'm pretty confident about. So if it takes the cable with it, then the next thing you know, we're going to be trading down here at the 78% retracement. So it's like the euro. If the euro breaks through 111.50, the cable's probably going to break down here too, and then this is probably going to be the area to be on the long side. That's what I would think, because what will happen here, let me just stay on the cable for a second. This 4-hour RSI, it's probably going to drop to being oversold and then bounce, and then it's going to end up being divergent, right? So I think that if we have a stab down at those levels, you got to look to be a buyer there. If that's the case, again, I can't make the determination based on what I'm seeing right now that we're going to break through here. You got equity markets that are pretty well supported. You got gold that's not really coming down. So as long as gold stays up, equity markets stay higher, or at least not selling off, how can we expect more dollar strength at this moment? Again, based on the information that we have, it's not like I have, the Fed that's coming out today, shifting the way that their policy one way or the other. So right now, based on the information I have, we may break this 111.50. It looks like it's possible. I'd rather just wait to play it down here if it gets down there, right? The commodity currencies, they're kind of in a holding pattern. I mean, this is the last, this is a 4-hour chart, so you can just see kind of how frustrating things have been the last 12 hours, 12, 15 hours. I mean, we're in a, what is that? 40 pip trading range. That's a tight trading range for a day for the Aussie right now. Kiwi is very similar, doing the same thing, not giving us many clues. Now, one of the currencies, and let me actually stop here for a second. And I did not mean to do that. I just deleted the New Zealand US dollar. I wonder how that happened. Let's see. So let me grab I gotta drag it back up here. I accidentally did that. I did not mean to kill that. Where'd it go? Oh, there it is. Okay. It takes me a while to move all these. It's very frustrating when I do that. Okay, there it is. All right, a couple of the other currencies that I think we should look at is the dollar Canadian. The dollar Canadian is holding up really well. And this is with crude oil. This is with crude oil stronger today. The dollar Canadian's weak, or excuse me, the Canadian pair is weak. Canadian currency, jeez, Canadian currency is weak. Now, here's what I'm thinking. Let's look ahead to tomorrow. So tomorrow, we don't have any Canadian data. That's good, right? So tomorrow, there's no Canadian data. The only way this is going to break above the 137.20 level, which is really key resistance, is if there's some risk aversion. Is it possible that we make our move above here? Yeah, it is. I do think that from a risk reward perspective, and this is what I said yesterday, if we get to 137, you can short the dollar Canadian and just put your stops really tight. If you're in the camp that you're like, man, equities are just going to continue to go up, and I'm not really worried about that, then you want to sell the dollar Canadian up here at 137 and just put in a tight stop. If you're in the camp that equities are going to roll over, and I think that we're going to hell in a handbasket, then you want to be on the lookout for a break above here, because I'll tell you, if we break above 137.20, I want to be long pretty aggressively, actually. That would be a aggressive move, in my opinion, out of this channel. Okay, another currency pair that leads me to believe that is entirely possible is the dollar Mexican peso. Look at this. The dollar Mexican peso is brushing up with, let me move this here. It's brushing really key resistance. And from what I can gather here, it looks like we have a nice bullish wedge. Why is it a bullish wedge? Because when you have consistent highs and higher lows, that is the genetic makeup of a bullish wedge. Doesn't mean it has to break out higher, can break out lower, but the chances of it breaking out higher is probably like 65% versus 35% lower, right? So the probabilities are now starting to increase that you get an upside breakout. So what I would probably be doing is waiting for a move down here to 2260 and then looking for an eventual move higher, right? Like that. That's how I'd try to play it if I can play it. But the fact of the matter is the dollar Mexican peso up at these levels suggests that there might be some risk aversion coming, right? So that is something that I think we need to pay attention to. Last, I'll cover for you, and then I'm going to look at your questions or comments and see if you guys have any. The dollar yen, I mean, this is a pretty crazy. I did not expect the dollar yen to move back to 107.50. I just didn't. I didn't think it was going to happen. We had a nice little squeeze higher, and we've kind of reversed a very choppy price action. I'm not sure how to read it. It's not moving with stocks moving higher, stocks moving lower. Well, actually it probably can be, because it's just been extremely choppy. So anyway, it's just something new, just something I want you guys to think about. Okay, let me go over to the chat really quick. Nissim says, why is the gas is down 8%? What gas? Nat gas? Dude, I don't even follow natural gas. Wow, I don't even know why it's down. But it's breaking down and it looks ugly. There's always this constant, and I never get it, because I very rarely trade crude. I probably trade crude once or twice a year, like I am right now. But nat gas, I don't get it. I don't understand it, so I don't trade it. But there's always this idea that you should be buying nat gas because it's cheap. Okay. I don't get it. I don't get it. We're oversold. I wouldn't be a seller here. I mean, unless you're long and you're probably like, oh crap, how low can we go? I mean, I wouldn't be selling it here unless you got a really super tight stop. But yeah, I don't know. I don't know. I don't know. Jason says, Blake, do you think these currencies are consolidating for a month-end move higher? Seems the flows always come in at month-end and pushes risk higher. Thoughts? This month and quarter end, I'm not expecting a huge move, especially for, I'm not expecting a huge move because we have not seen big gains or losses in S&Ps. So I'm not expecting big dollar moves going into Monday and Tuesday of next week. That doesn't mean we won't get any volatility. I'm just, if I'm not sitting here looking at the euro saying, oh man, here comes a 400 pip move in the euro. I wouldn't be surprised if we just get a 100 pip move up and down that day, at the quarter end with currencies. But I do think there's going to be some volatility. So going into Monday and Tuesday of next week, we've really got to be selective into where exactly we want to be located to buy or sell. So in other words, target trading Monday, Tuesday. So if you're like, okay, I want to be long the euro dollar at 111.25, great, wait for it. If it gets there, great. If we get enough volatility, it takes us down there, fantastic. If it doesn't, wait for Wednesday, first day of the month. Jane says, Grega has a count to 50 cents on nat gas. Yeah, that would not surprise me. And, nat gas going to 50 cents, why can't it? I mean, when you saw crude oil go negative, why can't nat gas do the same? Although, storing natural gas versus crude is a little different, but still, I mean, maybe it's more, where's the demand going to come from? I don't know. Steve says the nat gas at this price is a good buy. I guess. Again, I am not going to have an opinion there just because I don't trade it, right? So I don't want to give you an opinion. But what the opinion I can give you technically is we are moving lower. And it's breaking down, and it's divergent as of right now. But who knows? Anyway, guys and gals, this is going to be the last daily roundup for the week because it's Thursday. If you're listening to this after the fact, that means you're not a ForexAnalytix subscriber. So make sure you join ForexAnalytix. It's only $1 for 10 days. Doesn't matter what version you're using, whether it's the premium or the light version. But make sure you download the mobile app so you have all this analysis in your hands. That's what I meant to say. One of the things I wanted to mention really quick for those of you guys that are listening in, if you are logging in via your mobile phone or a link from an email, you can also click this button right here if you're on your desktop. It says webinar on air. It says FA Daily Roundup. You can join. You just click that button right there and then it gets you in. All right. So that's something, a little trick for those of you that did not know that button is there. It comes on about 5 minutes before our webinar is broadcast. All right, guys and gals, have a great one. Thanks, everybody. And I'll see you in the chat rooms. All right. Thanks.